NIO's journey this 2023 has been nothing short of a roller coaster. The stock's ride has taken investors through thrilling highs and heart-stopping lows. Picture this, a dramatic 38% surge in January, only to be followed by a stomach-churning dip to $7 in June, the lowest since 2020. But hold on, there's more to the story. In the buzzing world of electric vehicles, NIO stands as a formidable player. As we explore NIO's trajectory, we'll uncover predictions that hint at a surge in 2023, glimpse into what 2025 might hold, and even gaze ahead to 2030. Stick around because this is more than just stock talk, it's a journey into the future of electric vehicles you won't want to miss. NIO's stock price has experienced significant ups and downs throughout 2023. The year began with an impressive jump of 38% in January. However, this excitement was followed by a sharp reversal as NIO shares plummeted to $7 in June 2023, a level not seen since June 2020. But here's the interesting twist, the stock didn't stay down for long. After hitting those June lows, NIO's stock made a noteworthy recovery, surging by 50% from its lowest point. What's catching attention now is a potential game changer. The stock appears to be attempting a major breakout from its previous downward trend. And this isn't just speculation, recent analysis suggests that this breakout could propel the stock price upwards by a substantial 35%. NIO has also found itself in the midst of a pricing puzzle. As renowned brands slash their prices, concerns arise about NIO's pricing prowess. There's a worry that NIO might need to follow suit, denting its profits. Indeed, NIO has already taken steps, offering incentives to its customers. But hold on, these aren't just about outdoing rivals in price wars. Instead, they're part of a strategic move to transition to the second-gen NT 2.0 platform. The game plan is to speed up the sale of older stock, clearing the path for this new era. JP Morgan recently bumped up its price target for NIO shares. The big investment player revised its prediction, moving it from $8.50 to $9. Despite this, JP Morgan is sticking with a neutral stance on the EV maker's stock. Now, if we take a peek at the numbers game, a survey conducted by Capital IQ tells us that NIO is in for a ride with a target range spanning from $6.66 all the way up to $19.87. It's like predicting the weather, but with stock prices. There's also other good news in NIO's recent developments. The company is rapidly accelerating the growth of its battery swap station network, a move that's anticipated to significantly boost its revenue. NIO has successfully introduced approximately 10 state-of-the-art battery swap stations across China. These stations, a real boon for long-distance travelers, serve a dual purpose, enhancing customer convenience and adding to the company's bottom line. What's particularly noteworthy here is that NIO is among the handful of electric vehicle manufacturers making a substantial bet on battery swapping technology. Interestingly, Tesla's CEO Elon Musk dismissed this concept after careful consideration. Yet, NIO remains undeterred and remarkably optimistic about the technology's future potential. In fact, the company has big plans to expand its battery swap network on a global scale, embracing the technology that others have left behind. In addition, NIO is extending its footprint in Europe, showcasing its commitment to a global EV revolution. A battery swap station has already been launched in Germany, a strategic move to capture a bigger slice of the market pie. Notably, NIO is making waves in Norway too. The European landscape has witnessed the establishment of more than 10 NIO battery swap stations, with a bold vision in sight. Looking ahead, the EV powerhouse is poised to leave a substantial mark. By the year's end, NIO's plan is to set up an impressive fleet of 120 power swap stations across the region. Fast forwarding to 2025, the ambition gets bolder, over 4,000 battery swap stations across the globe, with more than 1,000 stationed overseas. But before we continue, we want to thank you for watching this far. But despite all the good news, there are still some concerns lingering in the air. Many stocks representing Chinese companies listed in the US have faced a tough time recently. This slump can largely be attributed to worries about China's economy. However, there's a glimmer of hope on the horizon, whispers of favorable policy changes from China's government that could breathe new life into these businesses. Yet, on a closer note, NIO stock traders have been eyeing another issue, Tesla's recent price cuts. Just a while back, Tesla made waves by slashing its vehicle prices by $1,900 in China, accompanied by an insurance subsidy. Even Elon Musk, Tesla's CEO, hinted that more cuts could be on the way during the latest earnings call. Now, let's not get too caught up in these concerns. Not everyone's losing sleep over NIO's future. Investor place Dana Blankenhorn certainly isn't. There's a good reason for that optimism. Blankenhorn believes that the course of NIO stock will be more influenced by none other than China's president, Xi Jinping, than Elon Musk. NIO and Tesla may both be players in the electric vehicle game, but they're playing different cards. NIO is setting its sights on the luxury vehicle market, aiming to keep its customers loyal with stellar service and those nifty battery swaps. Moreover, NIO is about to make waves on August 29th. That's the day they're set to unveil their second quarter financial results for 2023. As this date approaches, Wall Street experts have been adjusting their predictions. Morgan Stanley's analyst, Tim Seow, has taken his NIO share price forecast from $12 to a more optimistic $18.70. Over at Deutsche Bank, Edison Yu wasn't holding back either, pushing his price target from $13 to $17. Even Bank of America's analysts joined the chorus, increasing their NIO share price target from $15.40 to $16.20. The message here is clear. These experts feel pretty bullish about NIO's performance. Their optimism isn't misplaced. NIO's recent track record shows exactly why. In July, they knocked it out of the park with a staggering 20,462 vehicle deliveries, marking an astonishing 103.6% increase compared to the previous year. So, what's the catch? Well, analysts are projecting a quarterly loss of 41 cents per share for NIO in the second quarter of this year. While that might sound concerning, it's worth noting that NIO's been pushing their vehicle deliveries hard. This means the bar has been set low, leaving room for them to potentially surprise us all with a stronger financial performance than expected. NIO's earnings call will be on August 29th at 8 a.m. U.S. Eastern Time. If you plan to participate in the conference via a dial-in number, registering in advance is a good idea. Remember to dial in about 10 minutes before the call begins to ensure a smooth connection. This is your chance to get direct insights from NIO's management about their recent performance and future plans. Now, let's look closely at NIO's stock predictions for the upcoming years. The electric vehicle landscape of 2023 has seen a significant shift, causing many EV stocks, including giants like Tesla, to experience double-digit declines. As for NIO's stock, analyst sentiments are a mixed bag. Compiled data from MarketBeat suggests an average target of $22 for NIO's stock, a notable rise from its current price of $9.99. Prominent voices like China Renaissance, Mizuho, Jefferies, Deutsche Bank, and UBS express bullish attitudes, often recommending a buy or hold stance. Widening the lens, a broader analysis reveals a prevailing optimism among many analysts. TipRank's compiled data also indicates a target of $16, higher than its present value. However, the crystal ball remains clouded, and the long forecast anticipates a tight trading range for NIO in the coming months, projecting the shares to dip below $8 by the close of 2023. Fast forwarding to 2025, NIO stands to benefit from the global push towards mainstream electric vehicles. With various countries, including Europe and China, charting plans to phase out combustion engine vehicles. As we cast our gaze even further to 2030, optimism takes hold. Given NIO's rapid growth trajectory, there's a bullish sentiment that the stock will surpass its current levels. In fact, historical precedent suggests the stock could even triple by 2030, possibly reaching over $70. Much like Tesla's remarkable journey, NIO's potential knows no bounds in the realm of possibilities. But as always, staying informed is key. Keep a close eye on NIO's developments, as the electric vehicle landscape is ever evolving. However, remember that investing in stocks carries its fair share of risks. Before making any investment decisions, it's wise to consult financial professionals who can provide tailored advice based on your situation. Thorough research and analysis should be your compass in this journey. So, what are your expectations for NIO's path ahead? Let us know in the comments section below. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, if you want to know more about NIO's upcoming earnings report, I highly recommend watching this amazing video. Just click this video right here. Thank you for tuning in and stay tuned for more exciting content in the future.